Hey everybody, Rob Maurer here, and today we are going to be talking about some rumors out of China on Tesla's next generation platform. We've also got a couple of updates on FSD, some pricing and market news. We've got a sales update from Ford, and more. Not too much going on with the stock today. Tesla down 1.1% to close at $192.58, while the Nasdaq was down 0.5% on the day. So we'll get right into the news. We've got reports out of China today from 36KR, covered here by Sina Finance, about Tesla's next generation vehicle plans. They say that 36KR has learned from several industry insiders that Tesla is planning a grand production capacity map for its new low-price models, with a source telling 36KR that, quote, "This low-price model is a small Model Y. Tesla is building an annual production capacity plan of up to 4 million vehicles," end quote. Alright, so of course just rumors, but a decent amount of information there talking about the 4 million vehicle production capacity plan. Probably not too surprising given what we need Tesla to eventually ramp up to continue to hit that 50% annual growth rate target. To track towards that, and I think to have any hope of actually getting to 20 million by 2030, you've got to track kind of at least towards that, if not above that. But that would put you at an 8 million vehicle run rate sometime in early 2027, so about 4 years from now. As we have talked about, right now Tesla is at about a 2 million vehicle per year run rate. That'll keep scaling up a bit with current products, and then you layer in the Cybertruck, maybe you layer in a van. Those are kind of the things that we have heard about. And then it's really the next gen platform, so when you start to map all of that out, slotting in about 4 million vehicles for that next generation platform fits pretty nicely in that 3 to 4 year time horizon that we have seen Tesla on multiple occasions now, with Shanghai, Berlin, and Texas, go from the initial stages of a factory plan to hitting volume production. So from that perspective, it's something that seems relatively plausible. They go on to say that this 4 million vehicle production capacity, quote, will be distributed in global factories, of which the Super Factory in North America will undertake 2 million vehicles, and the Berlin factory in Germany and Shanghai Lingang factories are responsible for 1 million units each. Among North American factories, the Maurer plant in Mexico will be the main production capacity of this new model, end quote. So this is also something that I think seems relatively plausible, and when you start to think about this being distributed among those 3 factories, 2 of which already exist, and 1 of which we already know how quickly they can work towards 1 million vehicles in capacity, and then you think about how we're finally starting to see the benefits of Berlin and Texas both ramping up at the same time, all of a sudden it doesn't seem too crazy for Tesla to track towards that 50% compound annual growth rate, and maybe Tesla doesn't even need 4 years to add that 4 million vehicles of capacity. I think for things like this, it can kind of just drag on, and it seems like the progress is slow, and then all of a sudden it kind of explodes. I think we've seen that multiple times through Tesla's history, and I think we've just been in one of those kind of periods for a while now with Tesla. Thankfully, we've got the Cybertruck coming up soon to break that up a little bit. And then hopefully that rolls right into the next generation vehicle. The last part of this report says that one source said that it is, quote, at least a year away, end quote. So if nothing else, and even if these rumors aren't 100% accurate, it's really exciting to start hearing rumors like this pop up in the supply chain. I think that by itself is probably a pretty good sign for plans progressing on this in a serious way. Last quick thing on this report, I did happen to take a look at the comments, and the 2 most liked comments I wanted to point out. The first one says, Tesla, the big catfish in the new energy vehicle, is really full of vitality, which I think is a positive comment, so good to see that have some nice response. And then the other one was, domestic car companies will create Tesla Black stories even more crazily. So sounds kind of like what you might hear in the US about mainstream media or legacy automakers, and the spin that we're often talking about. Just thought it was kind of interesting to see those as the top comments. Alright, next up we'll stay with China. We do have another rumor, this time on FSD, covered here by CNEV Post. They say that Tesla is about to begin large-scale testing of FSD in China, according to reporting from Caixin. So large-scale testing could mean Tesla customers getting access to FSD Beta in China. I think it's probably a little bit soon for this, so I'm not putting a ton of weight in this report. It was just kind of a throw-in to a piece on BYD. This also follows a comment from a popular auto blogger on Weibo with about 500,000 followers, who said that there would be a major update to autopilot in China relatively soon. So it looks like a couple of reports, but it's possible that this second report is just kind of sourcing from that first piece of information. But regardless, we have seen how these timelines tend to unfold in the United States. So even if this is Tesla's aspiration or plan, my best guess is that this will probably still be a ways away. As for FSD in general, Elon did tweet today saying, quote, team is closing the loop on interventions very rapidly. To get enough training examples for potential serious accidents, we have to run them in sim, as we have so few in the fleet despite doing about 1 million miles per day of FSD, end quote. Obviously, in general, that is good to hear, but the inclusion of the 1 million miles per day statistic is also very interesting. From the Q4 shareholder letter, we know that Tesla's fleet was doing about 10 million miles per month on FSD Beta. So over just the last quarter, Tesla has roughly tripled that rate. Obviously, that's going to happen through more vehicles being sold, and then hopefully over time through higher utilization as well. We should be in the midst of a step change on that utilization because of version 11 going to full stack. That'll pull highway miles that didn't previously accumulate into this data set. Now, only a fraction of cars have that so far, even of FSD Beta customers, but that should sharpen the curve in cumulative FSD Beta miles over the next couple of quarters. Hopefully that also helps sharpen the curve in terms of Tesla's rate of progress on FSD as well. All right, moving on, we've got some new sales information reported for Tesla in China. We'll take a look first at weekly insured vehicle numbers to round out the quarter. We know worldwide already, so we'll go through this pretty quickly, but for the last week, which includes March 27th through April 2nd, so a couple of days here in Q2, there were 14,725 vehicles insured in China from Tesla. It's about 1,500 vehicles fewer than the week prior, but not surprising, especially given that that does overlap the quarter end. So actually a little bit higher of a number than what I would have expected going into this week. Now this means that for these last 13 weeks, again including those couple of days in April, compared to the same number of weeks for Tesla in Q4, this was up 13% quarter over quarter, and obviously we already established that this is a record quarter for Tesla in China. As for BYD, they ended the quarter on a pretty strong note, about 46,000 vehicles insured over the last week, so that is the highest for them over the last quarter. Nevertheless, still trailing the strong weeks from the fourth quarter, so on a quarter over quarter comparison basis, BYD down 20%. The other piece of information we have on China sales today is from the CPCA early releasing the wholesale sales figures for March. So remember, this is retail or domestic sales plus exports. CPCA puts that at 88,869 for Tesla in March. Looking at the insured vehicle numbers, we can make a guess on how retail versus export is going to split. We'll get that breakdown as well as the production number for March over the next week, but for now we can estimate that there were probably around 75,000 vehicles sold domestically in March in China and about 15,000 exported, obviously give or take 1,000 or 2 from each of those buckets. So March probably not going to end up as a record month for Tesla in China for domestic sales. Would need about 78,000 for that with that record set back in June last year, but this should put domestic sales at about 136,000 or so for the quarter, which, as the insured vehicle numbers imply, should be a record by about 12%, and that's also up 25% for domestic sales in China year over year. All right, next up we've got some new markets for Tesla. We had talked previously about Tesla preparing to open up in Turkey. That configuration studio has now gone live today. Always nice to see Tesla enter a new country, now officially open in Turkey. Tesla has also expanded the availability of the long-range Model Y, now offering it in both Japan and Australia, both markets where this trim was not previously available. Coinciding with this move, Tesla has also cut prices across many vehicles in Australia, pretty minor tweaks on the Model Y, but as we see here for the Model 3, roughly a 4 to 5% price cut on all trims. Similar 4 to 5% price cuts in New Zealand, although the Model Y also included in the drops there, also about 4 to 5%. So in terms of worldwide impact, that's not going to be a huge hit, but again, that's the concern that the market is going to have, that there will be more of these across different regions, especially until we have more solid information on margins. Next up, we've got some updates on Tesla Legal. Of course, we know previously Elon had talked about building a hardcore litigation team at Tesla. We've got a little bit of movement on that with Tesla's legal counsel recently posting on LinkedIn, saying that Tesla Legal is building something unique, a full-scale internal litigation and trial team that can handle all aspects of litigation and trial work, including briefings, hearings, discovery, depositions, and trials, completely in-house. Elon gave a little bit more context on this on Twitter, saying that, quote, Tesla will continue to use outside litigators, but it's important to build a powerful litigation team internally so that we're not always on the defensive. We'll also go after the Wall Street short sellers, certain law firms, and sometimes corrupt regulators who are the true evil, end quote. As we have seen, Tesla a little bit more willing to pursue what they think is right than other companies, and it's kind of unfortunate, but that can definitely involve litigation. Next, we've got kind of a fun update from Tesla. They have announced on Twitter that they are going to be having an Earth Day Tesla photo contest that actually is housed in the Tesla app in the loot box. They are looking for people's best Tesla photos by April 23rd, and it looks like the prize is going to be 3,500 Tesla credits, which can also be earned through the referral program, and then be redeemed for things like supercharging miles, merchandise, etc. That's not a crazy high monetary value, so hopefully there are multiple winners of this contest, but it's cool to see Tesla doing something fun like this, and I hope we see more of these types of things. All right, last few items for today. As we talked about yesterday, we did end up getting the release from Ford for March and Q1 sales in the US. Ford sold about 457,000 vehicles, so like many other brands, this is down quarter over quarter, down 5.6% for Ford, but up 11% year over year. And of that total, they sold about 10,000 electric vehicles. The Mustang Mach-E was quite a bit lower this quarter than normal, 5,400 vehicles sold. That was down 20% year over year. If we look at the monthly chart, we can see that sales decline, and it looks like this really corresponds with Tesla's price cuts, obviously. Steep drop in January, February, and March, and then also if we look at the quarter over quarter, this is the worst quarter for the Mach-E since introduction. But Ford does note that this was because of production downtime for the Mach-E in the first quarter, and they do provide their production numbers in pretty great detail, so you can see for the Mustang Mach-E in January and most of February that there was no production. So unfortunately that kind of takes away the chance for us to see what the reaction in the market to the Mach-E would be given the price cuts to the Model Y, since production obviously had an impact here, but the Model Y price cuts probably would have or did as well. Ford does also list 4,600 Mustang Mach-E's as part of their inventory. Nevertheless, they reiterated plans to continue to increase the production capacity as we had walked through earlier, still planning to push that up to a couple 100,000 vehicles per year. As for the F-150 Lightning, much better quarter there, a record quarter, almost double the previous high. Not as much competition there right now as for the Mustang Mach-E, so we'll keep a close eye on these, particularly the Mach-E, as that gets ramped back up. Alright, and then last item for today, just a quick note that there's some coverage of Brand Finance naming Tesla as the most valuable automotive brand in the industry this year. While I would agree that that is likely true, I don't put really any merit on the methodology from Brand Finance. You may remember a couple years back I had them on when they had Tesla as the fastest growing auto brand, and just in general found the methodology to be extremely lacking. It just seemed to be basically looking at the sales growth and then saying, yep, it's the fastest growing brand, look at the sales. And then you look at a report like this report today and the person that I interviewed essentially saying that this brand growth is a positive sign that can lead to more sales. So it seems like a big circular reference where they're just saying, hey, more sales, and then that makes the brand stronger and then it gets more sales. Sounds great, but I really wasn't finding any actual meat to the analysis, so I really just discard any of these updates. Alright, that is it for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Wednesday, April 5th episode of Tesla Daily. Thank you.